One of the things that is really important to mention is that your star has risen somewhat in the last month because now you are no longer Cirsten Claassen, CEO of Finvoke. You are now Cirsten Claassen, CEO of award-winning accounting firm Finvoke. And I think a hearty congratulations is in order. That's quite phenomenal. Can we maybe just can you share a little bit about the most putting on all the pyrotechnics there? If we had the ability just to kind of put confetti all over the place, can you share a little bit about the award that you won, my man?
Great, thank you so much. I really appreciate it. If I just made a mental note that if I'm ever down, I'm just going to give you like a phone call.
I'm here for
you. Awesome. Yeah, so we are all allocated the award was with Xero, and because majority of our clients use the platform, it made sense to become a partner on that platform. And at the beginning of the year, my account manager just kind of said, maybe this is a award worth entering for you. So we entered the emerging practice of the year, and then all of the practice partners get a chance to enter for the award. I think for the category that we were in, there was about 85 entrants into that category, and then they have a whole list of judges and panels and people who look at the stories. And I mean, for me already, it was a massive honor to just be named finalist, and to actually have won the category was awesome. My partner took a video while I was on stage, and they announced the winner, and you can visibly see how confused and unprepared for the moment I was. I'm just standing there awkward on the stage, looking around like, what now? So it honestly was not expected, and to be recognized by platforms such as Xero was really a awesome honor for us as a company. And yeah, it's just like it's almost like a confirmation that what we are trying to build is sort of moving along in the right directions.
Well, I think on behalf of all of us at Heavy Chef and the community, hearty congratulations. I think it's well deserved, given how well your recipe came out and the words of wisdom that you espoused in the recipe itself. I think that we can very confidently say that it was well deserved. And I think that's a good note to welcome you, my man. And it's great to see everybody on the call. So we've got a bunch of questions, or at least I have a ton of questions. I watched your recipe and you came across so well. I just want to first of all, welcome everybody on the call, but just to remind everybody that this, for the next 55 minutes, is your opportunity to ask Cirsten any questions. If you'd like to ask Cirsten Claassen, CEO of award-winning accounting firm Finvoke, a question, then please just pop it into the chat, and we can just take from the chat the most compelling questions. Yeah, and I think in terms of when I think about the Xero Awards, I've been to a couple of them, and my world, those things, I mean, they really put a lot of money behind them. They are properly representative of, I think, quite an exciting little subsection of small business South Africa. The fact that Xero putting so much money into, I think, what is a great cause, and these accountants are essentially accountants such as yourself, who are supporting small businesses, supporting entrepreneurs, advising entrepreneurs, and mentoring entrepreneurs along the way. I think the role of an accountant has changed irrevocably over the past few years with the advent of cloud-based accounting. And I have a question. I'm going to open up just with I think the contrast, Kirsten, of the fact that, I mean, you used to work in Germany. I thought that was hilarious, the story that you actually had no clue how to speak German and you're working in a German firm, and that was fairly difficult, particularly given that you were in a numbers game. You worked in a big four firm. Maybe you can tell us what your life is like now, that you're, just compared to back then when you're working in a massive firm, and now you're focused on really helping small businesses. Can you talk about that contrast?
Working in one of the big four firms, the focus is on the task at hand. It's a audit that had been done the year before, and it's the same audit kind of being done now, and you're essentially there to help get the audit done. You plugged into a team and you just kind of follow the processes that have been set out. And believe me, this is not a me bashing any of it. It's just it is what it is essentially. And I just kind of what prompted me to run Finvoke and coming back was just I didn't feel there was really any value that we were adding, because obviously by nature of what we studied and the experience that we gained, there's a lot of value we can add into a lot of people who kind of need those expertise. And in coming back, I started having a lot of phone calls with friends and families and connections, just kind of asking for assistance, whether it's with accounting, bookkeeping, but mostly compliance related matters from a SaaS point of view. And I realized there was quite a big gap in that. A lot of people were needing what I was able to provide. And just for me, working with small businesses and being able to assist people run their business, be compliant, build a strong financial foundation versus working in corporate, is just two different worlds. And I really felt that I could add value and have an impact by working closely with smaller businesses rather than around the big four, so to speak.
Yeah, it definitely came through strongly in your interview, on the Heavy Chef interview, which, by the way, Mo, I believe is live right now. So you can go to heavychef.com and you'll be able to have a look at it. And the way you answered the question, there definitely is a real deep and authentic passion for the work that you do. I think it's difficult. I know quite a few accountants, and I think often accountants, there's almost like this perception that we have of accountants as being like just the numbers person, and like that's the person that gets it done. And I think what you have is this added layer of meaning and purpose, whereby you see the role that small businesses have in society, and it somehow drives you, I think, in a really special way. And so, Kirsten, I mean, I think I'm not going to ask you the same questions that we did in the recipe, and I encourage everybody to go have a look, because there's lots of practical things there. But I want to ask you some fun questions and like little sort of personal questions. And once again, if anyone has a business related question to your own business potentially that you'd like to ask Kirsten, now's your opportunity. Kirsten, now that he's won this award, has tripled his rates, so this is your opportunity to get Kirsten for free in in the next 50 minutes. So you have your gap. I want to know from you, Kirsten, what is the one misconception about accountants that always makes you laugh or smile, that people have?
Definitely the personality side of things. Every time I speak with people, they just tell me like, I would have never said you're an accountant. And I ask them why, and they're like, you have a personality, so to speak. So where normal accountants would look at their own shoes when they talk to you, I look at your shoes at least. So there's like I increase the barrier there. But yeah, misconception is just they are bland, boring people, which is always quite interesting for me to hear.
Can you share potentially? I mean, I think you must have seen a lot of things in your career, helping helping small businesses. Can you, I mean, without naming names or anything, like, have you seen, what's the, like, the funniest or the strangest financial mistake that you've seen, like a small business or an entrepreneur make? Have there been any kind of like real clangers? I mean, I'm sure there's a few and you don't want to name and shame, but I think it's just interesting. You must have like such a beautiful under the bonnet view of what goes on.
Yeah. So there's the dangerous little account called director's loan or shareholder's loan, where people spend quite a lot of things through, which you can't necessarily rationalize to be on your income statement or as a business expense. And some of the things we see going there is like you have to take double takes just to be like, am I seeing the wrong thing? But I think to keep it above board, one of the funniest things I've seen so far is where we had one of our clients kind of buying their pet food through the business. And you know, when I asked them, okay, cool, you know, how do you rationalize this as a business expense? They said, well, you know, it's security, so you can just add it as part of the security line item on your income statements. Well, we've seen haircuts go through repairs and maintenance, or
I mean, that makes
going.
sense in a weird way.
It does make sense, right? Sure, we've seen clothing going through advertising. It's yeah, there's a lot of fantastic things we see, but I think the best is the rationalization behind all of it the moment you start asking the people spending the amounts.
Can you, I mean, okay, so obviously there's a lot of ways one can use one's business to, you know, to pay for things. I mean, can you maybe then share, in your view, how should we be thinking about, you know, the difference between business and personal expenses? I mean, FYI, and also for context, you know, in all the work that we do around the country with small businesses, I think this week we have, you know, approximately, I think it's about 280 businesses starting on a new program, a cycle that's happening in all the different provinces. It's one of the most asked and often discussed points around how do we separate business and personal, and when we are struggling as human beings and the business has some income, how do we prevent ourselves? What is the way to think about that problem of spending the money that's there? It's accessible, it's attainable, we have the card, why not, you know?
Well, firstly, I would prompt people to just kind of think of what do they want to achieve with the business. You know, are they kind of happy with where they are in the business journey? Has the growth kind of stabilized, or are you looking to actually actively grow the business, reinvest the fund into spending, marketing, expanding, things like that? Obviously, if you're looking to expand, then spending the disposable cash that you have in a business is not a fantastic idea, because you're essentially taking away what you would have available to then you know, expand. So then if you're kind of stable, because I mean, there are people who are quite happy just having a couple of clients, you know, having people helping them out, and obviously there's disposable cash there. And I think then, as you said, the big conversation is around how do you take it out, how do you spend it. A lot of people have questions around, you know, what's the most tax efficient way to work with disposable cash? Can I spend you know, for personal kind of expenses out of the business, etc. I would say for me, the number one thing, like if you want to be able to claim your expenses in your income tax return when you file, the big question there to ask is, was it in the production of your income, essentially? And there's a lot of things that you can spend through your business, but for me, the one main test is like, is there business rationale behind it? Like, can you argue why this was spent in your business if SARS came knocking, you know, for example, and just ask, you know, what's the rationale behind that? A lot of times there's also people who kind of go from being a sole proprietor to establishing their business for the first time, and there's this gap kind of where they're still spending a lot of business expenses on their personal bank accounts versus not through the business, and they have a lot of things that they're still personally covering for the business. And in that case, definitely it's paramount importance that you make sure that those things come up on your business, in order to be able to deduct from any income, tax returns that you might file. But, anything that's business related, keep in your business, make sure you spend it using a business card, and anything personal, try to keep it separate. It makes everything cleaner. It makes compliance cleaner. Yeah.
And I think, because it's so easy, well, not easy, but it is certainly possible to rationalize anything, really, right? And so somebody once said to me, I think it was quite helpful, if it doesn't feel right, it's probably not right. So that's a sort of a internal check-in, that one can do, because otherwise you can just kind of like pretzel something into shape, and you can say, well, it kind of does this or that, and I think that's the sort of thing that people do all the time. I think that if it's what I would like to, just a last point on this particular question, I'd like people to understand, I would like to understand, what's the benefit of doing it right? What's the benefit of keeping it clean at the end of the day? Like, what sort of tangible benefit do we get from being disciplined about separating our personal and business accounts?
Well, I would say that the biggest, win essentially is just from a tax compliance point of view, separation makes compliance a lot easier. It's a lot easier to provide, one single bank statement to an accountant and say, please help me sort out my business tax returns versus my personal, especially if you are a sole proprietor, and there's no structure kind of set up for a business yet. Handing one piece of kind of bank statement to say, okay, cool, this line item is business, this is personal, this is business. Firstly, it's a massive tax on your time. It's difficult to prove from a SaaS point of view, especially if you have one personal, say, income statement, and you're a sole proprietor and you have business in the trade. Now, how are you going to justify to SaaS that this fuel expense was actually for travel for the business versus your personal? This meal that you went and you had with a client was actually with a client and not with a family friend. So creating that separation already kind of serves as proof if they ever want to verify that, okay, here is a separation. This was purely business. This was purely from a personal point of view. And then, if we not go into a bit more of like, from a budgeting kind of forecasting side of it, we then go into the arguments of, investing into growth and things like that again. If your kind of income statement or cash flow is being eaten by, or, it's kind of muddied by what you personally spend as well, it's a lot more difficult to kind of, establish where the spending's at, difficult to budget. So yeah, I think the main thing is just from a compliance point of view, making your life easier as well, especially if you don't have the business registered as a separate structure. As I mentioned, for a sole proprietor, that is the most important. Like, my first advice would always be to have your personal account set up a separate account for your traders and sole proprietor, for example.
Yeah, it's such a good point, the compliancy stuff. And I think people, well, certainly most of us don't understand until we actually are forced to understand how impactful it can be, when we're doing our accounts or when we're finally doing audits and all that sort of thing. And I think, there are also even second and third order consequences to the extent that when one is looking for loans or when one is looking for investment, and if somebody wants to, potentially become a business partner, it becomes really, really difficult to justify those little spends all along the way. And it is a big red flag for investors to see that sort of thing. So keep it clean from the start. Is just, I think, yeah, your point is really well taken. I see Jade. Hi, Jade. It's good to see you, and we have a question from Jade Taylor Cook, who asks probably a question for later on. Well, we're asking it now. What if a well-established business with a very long-standing management team finds themselves running into financial difficulties month after month? What is the point at which that business should start thinking about bringing in an outsourced CFO, or even considering formal business rescue?
Well,
have you ever experienced that, by the way? Have you ever had a client who's gone through that or helped out with something like that?
So not any of our clients yet at this point, but I think to answer the question would be, instead of just going to a fractional kind of CFO immediately, it would be to identify what's the source of the struggles essentially that the company's facing. It could be a lot of things. It could be team structure. It could be, like, to kind of answer, I would need to understand what causes the difficulties in the business, and why do they find themselves in a difficult position. It's like because of cash flow, is it because of people not paying large amounts outstanding debt? Are they over geared in terms of, like, do they have a lot of loans that they need to repay? So I think there's a lot there that needs to be that I would need to understand before I can really address that.
Sure. I think there's a really just a sort of reading between the lines, Kirsten. There's a kind of like a sub point to that, in that what I'm hearing you saying is, like, diagnosis is really important at that stage. So
100%. Having the issue of solving 50% of it already, that old proverb.
And Jade, we've seen that a lot in our community, in that often it's the case of we don't know what we don't know. As a business owner, it's often really difficult to understand, like, what's going wrong. Like it sometimes, when one is stuck in the weeds, stuck in the trenches, we're hustling every single day, and all of a sudden at the end of the month, we're like, where the heck is all the money gone? Like, how do we justify that there's that we don't have anything left? And often it's a case of having to go back and really kind of understand what are the habits or the ongoing mistakes that we're making, in terms of maybe it's a perception of your costs versus the return, maybe not pricing it enough, and so on. That diagnosis, at least if I'm hearing you correctly, Kirsten, it's so crucial, because then one can start to bring that into an outsourced CFO, and potentially somebody at that stage could even come and help you do the diagnosis.
I would say, maybe just also to a question, kind of engaging accountants or a FM or an outsourced CFO could help with the identification of that, because a lot of times, when we look at management reports or month-by-month breakdowns of your financial information, it is quite, that we are then able to pinpoint, saying, okay, you know what, for the revenue generating salary might be too high, and that's the issue, or your margins aren't, we need to look at margins in order to improve cash flow. So there's so many things, but definitely engaging with someone who understands financial information would definitely help identify where the issues are, and from there you can kind of go into specifically what needs to be addressed.
Yeah, thanks, Kirsten. Sanele Mkize has a question. Hi, Sanele, it's good to see you again. How do you think we can improve the tax compliance for small businesses and further enhance the perception about accountants being too lax or late in submissions? There's a little bit of a subtweet, a bit of shade being thrown at accountants.
Yeah. Okay, maybe let me address the first part, Fred, if you can maybe just repeat the first part.
So how do you think we can improve the tax compliance for small businesses? and I would say first job is to change to Finvoke, because they can help you with your tax compliance.
Yeah. Sure. So actually, a big part of the conversation we had, Fred, when we did the shoots, and in our discussions before and afterwards, I am on quite a mission to raise awareness in as much or in as far as possible for the compliance requirements for businesses. And it's in the recipe as well, where I discuss that, if I almost walk away today and the only thing people take away from this is just understanding at a base your compliance requirements for SARS, I'll be a happy man. There's the moment your company is registered with the CIPC, whether you use company partners, GovChain, whatever the case may be, there are obligations that arise. You are automatically registered with an income tax number, which means from the beginning you need to do an income tax return and provisional tax return for your business. Like whether you trade, whether you're dormant, whether you make money, whether you make a profit, it doesn't matter. It needs to be filed for your company to remain compliant. From the CIPC, you also have the requirements to do your annual return and your beneficial ownership declaration on an annual basis. Otherwise, you also risk non-compliance in those cases. And the CIPC actually started deregistering businesses that have annual returns outstanding for more than 2 years this year. And it's been brutal, like the amounts of people that kind of approached us with deregistered companies helping or asking for assistance reinstating has been shocking. So a very practical tip that I can give for this is if you register your business using something like a GovChain, because I know for a lot of people you really don't have the funds to even go to a company such as us, or to kind of engage with a outsourced or a fractional accountant. My advice for those guys would be to register your business with GovChain, because GovChain they have automatic reminders that they send to your email saying, okay, cool, you have a beneficial ownership declaration that's due, we can help. You have an annual return that's due, we can help. They send you reminders on your provisional tax returns, and they also send you reminders on your income tax returns. And they charge once-off fees for, like simple kind of returns in order to assist you to remain or stay compliant with SARS, especially if you're at the beginning stages. So it's like a once-off fee, you give them your bank statements, and they compile your tax return. So whilst that is great, and that's fantastic, and it really helps with compliance for small businesses, especially at a cost-effective way, there are certain nuances that could also be missed, and if attention isn't given to finances. But definitely at the beginning stages, it's an awesome way to go around it. There's also websites such as TaxTim, which have countless of resources around tax compliance. And again, just as long as everyone's aware, the moment you register your business, income taxes, provisional taxes, beneficial ownership declarations, and annual returns need to be done. Otherwise, your business will never be compliant. You then, like later when you start doing salaries, you start doing VAT, you start doing weird stuff in the business, there's more tax types to be concerned about. But at the beginning, the moment you register your business, those are kind of the 5 areas that you need to be aware of.
Thanks, Kirsten. Let's dodge the poor perception of accountants for now. I think
I'm happy to answer that as well, but yeah, if you want to move.
Well, I mean, if you can give us a quick kind of summary of it, that would be great.
Well, what was the question again?
Question was, how do we, I guess, how do we deal with the perception of accountants being too late or too lax in submissions?
Yeah, so unfortunately, I think that's just a symptom sometimes of the industry, and unfortunately for accounting businesses, a lot of times to be successful, it depends on volume. So unfortunately, most businesses are registered in South Africa with a February year end, which means 90% of the country's tax returns falls on August and February. And unfortunately, in that time, majority of accounting firms sit with 100 to 500 to 800. I've heard of 800 to 1,000 in another company tax returns that they have to do. And, if you aren't at that scale, it gets quite difficult to, to really start being proactive around certain things. And there's a lot of arguments to it, but I think accountants who are sometimes late or not really proactive, it's a symptom of dealing with too much.
Yolandi has a question, which I think is something that we've seen a lot of times from small businesses, particularly in our community, the micro businesses. As a freelancer, what is best from a tax point of view? Sole proprietor or actually register a business?
The classic. This is actually one of the questions we get the most, and unfortunately, there's no right or wrong answer. There's definitely, it's a long discussion. I can probably talk about it for the rest of this call, but I think let me just maybe highlight the main sort of areas. So, sole proprietors, I think let's break it down like this. Sole proprietor is definitely the easiest to run. It's the easiest to manage. You don't have to worry about TIPC. You don't have to worry about annual returns, beneficial ownerships, any of that. You are taxed as an individual and you run your business as an individual. So the red tape around being a sole proprietor is a lot less. I suggest sole proprietor for people who are kind of starting out a side hustle, starting out a business and kind of testing the waters. What I see people do a lot is prematurely start a business because they've heard from everyone that that's the most tax effective way to do it. And then 3 months down the line, they saw, okay, this is way harder than I thought it would be. They stop trading and then they stuck with a business that they need to either deregister or keep compliant for whatever reason. So I always recommend being a sole proprietor until you kind of figured out, yes, this is what I want to do. I actually have a base, I have a customer base, and I'm kind of serious. You've decided for yourself. This is, and that usually takes like the first 3-6 months, even a year. Where a business starts becoming really beneficial is where, well, firstly, if you as a sole proprietor make a lot of money, the more money you make, the more taxes you're going to pay. Because as I mentioned, as a sole proprietor, you're taxed as an individual as well, and as your income or taxable income from your trade increases, so does the tax rates that you pay. So at a certain point and at a certain taxable income, being taxed as a sole proprietor is going to be way more than it would have been for you being taxed as a small business. That being said, once you cross that threshold, there's another thing that I like to touch on in this is a lot of small businesses are not aware of the small business corporation rule, which then allows for people just starting a business. And there's a couple of requirements read. I can maybe even just send you like a list of the requirements for a small business corporation so people could just have it to kind of assess whether they are a small business corporation or not. But if you are a small business corporation, yeah, if you are a small business corporation and you are the first 95,000 Rand of your taxable income profit, not even revenue, is completely tax-free. After that, it's taxed marginal and the cap is at 27%. So definitely, if you were a sole proprietor and you start earning past a certain threshold, like it's almost a no-brainer to go over to a small business or to registering a business, especially if the small business corporation rule would apply. There are situations where we have people who have side hustles and they also have like a marketing agency on the side. And once you combine like the salary that they receive plus the taxable income from the side hustle, they also get taxed quite unfairly on the amount that their side hustle is kind of making as a sole proprietor. And in those instances, the cost of running a business, having people take care of your your compliance kind of work, but the tax savings you get is like the saving of that is much more worth than having run it as a sole proprietor. So yes, a business definitely gives a nice tax break. It costs more in terms of compliance, but if you have a small business corporation and you can apply for the small business corporation rule it's an amazing thing to have, and it really, really gives a nice incentive for businesses. For example, I was looking at it the other day. We had a company who was not a sole proprietor, a small business corporation, who had a taxable income of around 300,000, and their tax payable for a year is around like 80,000 rand. If you're a small business corporation on that same taxable income of 300,000, you're only paying like 10,000 rand in taxes. So I mean, that's a massive saving. So yeah, I wouldn't suggest just going and registering a business. If you want to try it out, be a sole proprietor first, test it out. And the moment you're ready to start kicking into gear, business might be the most beneficial.
So I think closely following that question and somewhat related, Randall, who is a photographer and videographer himself, he has asked the question around money mistakes for somebody who's starting out. And I believe he is maybe you can just confirm in the chat, Randall, whether this is correct. I believe he is a sole proprietor with the photography studio. What are some mistakes that someone like Randall, who's a service provider, who has fairly significant capital outlay, in terms of equipment and so on, what are potentially some mistakes that you can think of to avoid? Or perspectives for somebody who has a business like that?
Yeah, well, yeah, the first thing I would kind of look at is, the structure then again for that being sole proprietor, because I'm assuming Randall does not have a lot of business expenses, because I mean it's him operating, delivering the service, and I'm assuming he doesn't have a lot of salaries or whatever to pay. So that income that you get from delivering that service, it's almost like clean taxable income. So first thing I would definitely look at, especially if you have quite a hectic capital outlay, is making sure that you are claiming the wear and tear deductible that you are allowed to offset on your assets that you use in the production of income, such as your camera equipment, laptop that you use, all of that. Make sure that any kind of softwares and stuff that you use in the production of income, you can deduct that. But the question around is more mistakes. Sure. Okay, well, it ties back to the first question. Mistakes to avoid is to have everything on one personal account. Please don't do that. That makes it a lot messier. But yeah, further than that, it's difficult without a bit more context, to be honest.
Yeah, and maybe Randall can, if you would like a follow-up to that, Randall, you can type it in the chat. Louis has I think quite a great question here, which is, do you agree with the sentiment, hope is not a strategy from a finance point of view? And I think, yeah, I mean, that's quite controversial, because obviously there's, it's quite loaded and emotional. But yeah, what's your point of view?
Yeah, I couldn't agree more. I basically say that, but just in different words, in terms of, you can either be reactive or proactive. And being reactive is just trading on hope, and proactive is, actually doing things to start implementing a strategy. And I can't tell you the kind of light bulbs that go off the moment you can provide someone with something as simple as an income statement for the last 3 months, who's never had that kind of insight into their business. People are often shocked to see, like, geez, I'm actually spending this amount on this, like what's going on there. But yeah, no, definitely, the moment you start being intentional around your financial reporting and getting financial oversight, like, I can't imagine running a business without that. I mean, how do you know whether there's an opportunity to explore if you don't know, whether you can firstly afford it, or what the effect's going to be on your profit margins, your cash flows, all of that going forward? Like, yeah, definitely agree.
I can personally testify to the experience of when, I first started growing as a business back in the early 2000s. You know, it was a digital agency, and as anyone here who's ever worked in advertising or marketing or in that sort of service realm, it's so time consuming that often it's really difficult to, you know, to focus on one's admin and, you know, financial reconciliation. And it becomes so anxiety inducing to, you know, to go down the rope of just, you know, I hope that it's going to be okay. Because at the end of the day, like it just feels like, I think, you know, you feel like you have one has totally abdicated control. And so I know the difference when I got somebody who was really good to help me with the financial management. It was just this feeling like I could breathe again, you know, like this feeling of just the weight of my shoulder, knowing that the invoicing was done in time, that the statements were done, that the cash flow is being managed, and to have, you know, kind of adult supervision when I was running around like an absolute hooligan, trying to get new clients in and doing the work and all that. And admin is not my strong suit, you know. So it's unbelievable to have those financial rails in place, you know, what it does to one's confidence. And then when one is actually producing the work, you know, how much better that work actually becomes, because you know the admin stuff is looked after. So Yolandi, you've got a question here. What's that threshold? So I'm not sure which threshold you are referring to. Is that the threshold for small sole proprietor?
Yeah, Kirsten, you mentioned like starting out as a sole proprietor and then looking at your income, and then once you kind of hit a threshold to start considering registering a business. So I was just wondering what that threshold would be from probably like an annual, I assume, revenue perspective.
Yeah. Perfect. Yeah. So also another thing I kind of just thought about now on Randall's question is also just a mistake that a lot of people make, is thinking if they pay themselves a salary as a sole proprietor, that you know, can be deducted. Like, you can't really pay yourself a salary as a sole proprietor. So, you know, it's like, again, that income is almost clean income. But anyways, to answer that question, I would say, you know, we would need to do a calculation and look at your taxable income. If you get taxed more, and by more I mean a higher percentage in your personal, and I mean, you can go look at the tax tables in on SARS's website. On they have the tax tables and the breakdowns there. But the moment you are taxed in your individual capacity through your sole proprietorship on a higher tax bracket or a higher tax rate than you would have been taxed through a business, then I would say, you know, it's worthwhile starting to consider going over to a small business, and especially if you meet the requirements of a small business corporation. From the top of my head, the requirements are all of the shareholders into the business, and also a misconception of shareholders and directors aren't the same thing. So all of the shareholders in the business need to be natural people. So they need to be, it can't be a company, it can't be a trust. So if all the shareholders are natural people and the shareholders don't have shares in any other Pty Limiteds, that's like one of the requirements. Your revenue through the business needs to be below 20 million, and not any 80% of your income can't come from one customer. It needs to, you know, that's one of the rules. And then I think the other rules regarding rental or investment income. But yeah, so I would say look at the tax rates in which you would be taxed as a sole proprietor versus as a business, and also take into account the small business corporation. Because again, the first 95,000 of profit is just completely tax free. And I mean, 95,000 of profit, that's quite a lot.
It's substantial, as you say, clean.
Mm.
I think it relates. Well, Nicola's got a great question, and then Jade, we're gonna circle back to yours. Nicola Fraser asked, "Is it beneficial to draw a monthly salary? Can you talk around this, please?" So you just mentioned it now, and I think that's it's quite important. And you know, you mentioned with Randall and the mistake. So Can you just give us a little bit of detail what you meant by that? So, yeah, I mean, Nicola's, she's phrased it quite well. And is it beneficial to draw a monthly salary? So, I mean, if you can talk around the different permutations of that and what that may mean.
Me or Nicola? Okay, cool.
No, you.
Awesome. Okay, cool. So, my first question there would be whether she's receiving a salary from any other employments. If okay, no, then definitely it's I would highly recommend paying a salary, and obviously those salaries can be structured, using the business and other things to be tax effective, but definitely paying a salary, because from a SaaS point of view, if no PAYE is being deducted, then where are you as Nicola? Like, how are you living as an individual? So that could definitely open doors for, lifestyle kind of audits or anything like that. And yes, well, so sorry, I've seen the other question from Nicola. So paying yourself a salary is also quite important. Like, if you ever want to have income protection or, that kind of insurance, because they look at payslips when they do that. If you ever want to have a loan in your personal capacity, you won't be able to do that if you don't have payslips. So I definitely recommend paying yourself a salary. I definitely recommend that you pay some sort of, firstly, pay some sort of PAYE so that you avoid any, tricky conversations with SARS. Because I saw the question was around provisional taxes as well. So if you don't pay yourself a salary through the normal structure of a monthly salary PAYE payslips, but you still pay yourself out amounts through the business, then you definitely have to be a provisional taxpayer, especially if that's not being withheld through PAYE on a month-to-month basis. So you can either do that, or you can pay yourself a salary. But a salary for me is cleaner because it manages that you don't have to pay a massive lump sum when the provisional taxes come. As I said, people look at payslips when you have you want to have insurance for income protection or any loans or anything like that.
Thanks, Kirsten. Yeah, that's super helpful, and I think that helps Randall as well in the point around paying himself a salary. So, and then Jade Taylor Cook's got another question, perhaps slightly off topic, but if someone were considering a career change into business finance with a view to become a...
Right, Fred, your mic's on mute.
Sorry, I got a phone call as it was coming in, and it just handed off to my laptop. So, with a view to becoming a fractional accountant CFO, where would they start in terms of becoming qualified? I just want to also mention that Jade is a really, really talented copywriter. So it would make us very sad if this is for you, Jade, because we use Jade's services as well. Please don't leave us. Yeah,
I'm just keeping my options open. I'm quite interested in the finance side of things after the last book, so I'm just putting out feelers.
Yeah. So the question is, how do you get to...
Where would you start to become qualified?
Sure. In terms of, okay, so I know to sign off on financials, you need a certain, kind of designation. To do tax returns on behalf of someone, you need to be a tax practitioner, for which you also need a certain degree. But if you're purely looking at, just kind of getting involved in financial analysis and advisory and things like that, I mean, I know engineers who are directors of, big financial accounting businesses who help with that advisory process implementation and things like that. So I think if there's specific things you want to do, as I mentioned, such as financials, tax returns, and things like that, then yeah, I'm not sure exactly, but I would think it would be some kind of degree or certificate that you would need. You would need to belong to certain regulatory boards, such as a SICA or a CIPA or CIMA is part of SICA, but yeah, something like that. But I think, just from an advisory point of view, to get in there, at least have some sort of background or a diploma or a short course or something that you did to, understand what a financial statement is, what it tells you, how you can break it down, what sort of analysis you can do. But I think the road to that might be, just getting in somewhere and getting experience, getting your hand dirty, and working with it as much as you possibly can. And then I assume it would just be what company would kind of take on a person in that role without, a lot of the qualification or background. But that's where something like a certificate or a short course or something like that. I mean, there's a SA accounting network that gives a lot of short courses on these type of things that I would definitely go and look into. I hope that answers somewhat of the question.
I think there's also quite a lot of information on Psyche. I think it's psyche.org or something like that. I'm not sure. We just go to SAICA in Google. Okay, Louis got a really personal question for you. What is the biggest financial mistake that you have ever made, Kirsten?
Me personally, in my personal finances.
Either.
Sure, didn't invest more in Bitcoin.
In other words, you're not able to read the future. What's wrong with you?
Yeah, no. And also, there's an old saying of the mechanics of cars always broken. I'm ashamed to admit it, but it took me disgustingly long to start implementing my own budgets and my own kind of forecasting. And that's why I'm so passionate about it, because that was kind of like an inflection point in how the strategy for Finvoke and everything came along. Like I was just in the dark, kind of trying to feel for places before I started implementing that. And and I think that's also why it's so great for me to chat about these things with founders and entrepreneurs and things like that, because like I'm going through this with them. Like I'm an entrepreneur and startup at heart, and I know how difficult it is to just manage every single thing else. It's like a horror. It's overwhelming, imposter syndrome, everything. And now you have to worry about finances and all of the admin, as you mentioned as well, Fred. So, but yeah, embarrassingly, that's like the worst thing from my personal side, I would say.
Yeah, thank you, Kirsten. I think that's really, I mean, I don't know if it's embarrassing or not, I doubt it, but I think the reality is that, it's actually quite encouraging to hear that even as Mo says in the comments, even from an award-winning accounting firm, you still also make a few mistakes, and I think, look, we're all trying our best out here. We're all, scrambling and hustling and trading and creating and, and taking bullets in the trenches. And I think it's, Heavy Chef, the name comes from Never Trust a Skinny Chef. And that was because we were skinny chefs ourselves,
Exactly.
And so it's,
the great philosopher Hannah Montana said, everyone makes mistakes. So,
exactly. Yeah. Exactly. I love that. And the great philosopher, Mike Tyson, everyone has a plan until they get punched in the face. I wish Strickus had listened to that advice before Saturday. I've got one last question for you, Kirsten. This has been unbelievably valuable, and obviously, you, as I mentioned to you on the day, you speak so clearly and succinctly, and you have this remarkable gift of making, very complicated topics simple. And I think that's your secret power. It's as we call it, the secret ingredient. And I think with South Africa, and we've seen your heart behind this. We've seen the way you are so passionate about this sector. If you could give every entrepreneur, if you had a magic wand, for example, and you had the ability to give every entrepreneur one money habit to start today, what would that be?
I would love for everyone to just implement one simple finance habit monthly. Just reconcile your transactions. That's like, that leads to so much. But if you just at least start with that, like that's one thing I would love to give to everyone. Just one simple finance habit.
So what does reconciling your financial transactions mean, practically speaking?
Essentially, at the most basic form of that, is to take your month's bank statements and allocate transactions to an account, whether it's sales, advertising, salaries, whatever the case is. But just reconcile your transactions and have a look at it. Plain and simple. Just at least start that habit. One money habit that I would suggest or would wish that everyone could start doing.
And speaking of being vulnerable and kind of revealing an uncomfortable truth, I think when the old business where Louis in the call was also a partner, we transferred that business over to a company called Saratoga Software. They bought us in 2013. And so we had 3 years to kind of do like a transition process. And in the first year, they took a look at us. And we were quite a substantial digital marketing agency by that stage. I mean, we had big clients, big banks, big auto, the telcos and all that. And they had a look at our books and they were like, dudes, like, how have you been running this for like 10 years? Because this is a mess. And what they did, honestly, the biggest improvement that they did was they reconciled our financial transactions. After 10 years, they did that properly. So they allocated the cost of sale to the sale itself. So it was that one simple move that we were just putting it in different like marketing and whatever, like we were just creating categories that we thought were correct. And they were like, no, this expense needs to be allocated to that sale. And it made the world of difference to us, in terms of being able to plan, to strategize, to make decisions, to mitigate risk, to do all the various things that even as a small business, we could have been doing for the last like 10 years, So, yeah, thank you, Kirsten. I just want to honor you again. I mean, your contribution to the recipe as well as your contribution to this category is incredible. And we can see a star rising fast. Just remember the little people when you're up there getting the big award at zero in 3 years time.
Yeah.
And thank you for your time and for your honesty and openness, and long may this trajectory continue for you, sir. And thanks to everyone else in the call as well. It was great to have some great entrepreneurs in the mix, and yeah, we look forward to getting your recipe out there and to the masses. Well done, Kirsten.
Awesome.
And your time on that.
Thanks, Fred. Really appreciate it. If I may, when you say remember the small people, yeah, this is a massive privilege for me. Like, this is quite surreal. I've always attended the Heavy Shift events and sitting in the stands and looking at the people talking about recipes. And I honestly put myself as a metric that, like, if I could ever make a recipe or, do something with Heavy Shift, that would, for me mean I've made it to some extent. And like sitting here chatting with you guys, it's just a absolute surreal moment, and a massive privilege for me. And yeah, thank you as well. Like, I really do appreciate it, and it's been an awesome journey so far.
Thank you, sir. Yeah, we really appreciate it, and we look forward to many more engagements in the future. Mo is going to be in touch, by the way, about our ambassador program. So your journey with us is not finished just yet.
Awesome. That's awesome.
Take care, everybody. Have a wonderful week further. Cheers, guys.
Cheers, guys. Thank you.
Bye-bye.